Thanks so much for joining us. Great to see you, and congrats, because both today's performance and year-to-date performance, you're well ahead of peers. I mean, particularly today, where some peers are declining sharply. You must be very happy.
Well, good to see both of you again. So thanks for having us. Hopefully what the market is just seeing is just continued execution on our part and our priorities. And also, continued progress in the economy. We're seeing some loan growth for the first time. We're seeing in a while. We're seeing good momentum in our wealth business and in consumer spending and other areas. And then we're executing on the things that we can control on our efficiency initiatives. We're returning capital back to shareholders, and we're continuing to support communities. So we still have a lot of work still to do, but hopefully people are seeing the progress that we're making.
Well, investors seem to like it today, Mike. Let's run through some of those individual points. You mentioned loan growth. What's driving that pickup, and how sustainable is it?
Yeah, well, we're really seeing it across the board in all of our businesses. And if you take the commercial bank as an example, part of that was driven by some new business we're winning. Part of it is clients starting to use their lines a little bit more, and part of it, is some seasonality that's in there as well. But also people starting to build some inventory. So we're seeing some good growth there. On the consumer side, we're seeing it in our mortgage space, our auto business, personal lending, and other areas. And then on the commercial side, in the corporate investment bank, we're seeing a little bit in the commercial real estate business as we continue to execute well there, and then some other sectors as well. So it's a little bit of a lot of areas across the board, which is good to see.
Do you think credit losses can remain this low throughout all of this year?
Well, it's certainly been much lower than any of us would have expected at this point. And eventually it will start to normalize. The question is exactly when. And at this point, it doesn't seem like there's any clear catalyst to start to see that change substantially in the near term. But, eventually we'll start to get back to more normal levels. But, it's hard to tell how fast or when that's going to happen.
Mike, I'm curious for your read on housing and what's going to happen to this amazing recovery we've seen over the last 2 years as mortgage rates rise.
Yeah, well, I mean, the good news is, there's, the housing starts have really started to pick up. You're seeing more construction both in single family and multifamily homes as you get to the end of the year. So I think that's some good news for the market. But as you say, the mortgage market, is, if you look at the industry data, it's saying it's going to be down 25 to 35%, driven by refinance activity declining as rates start to rise. But we should still see a pretty strong purchase market. And so that's going to impact everybody in the mortgage business. Hopefully we do a bit better than where the market's going, but I think you will start to see some of those declines in mortgage come through.